And variable rates are very important. Here, let's see this. This girl's good looking. Let's see what she has to say here. Let's get this chick from the beginning here.
Joining me now is our Sky News business reporter, Leo Shanahan. Leo, it's been a long week in politics. It's
Forgot about business.
Westpac today. I'm glad to be talking about business, but perhaps not glad on behalf of mortgage holders. This is an out-of-cycle rise from Westpac, and they've broken with the big banks. What's behind it?
Yeah, 14 basis point rise, Laura. Now, that will take effect on all non-variable home loans from the 19th of September. And look, this goes to the cost of funding for the banks, the wholesale funding cost. That is the rate at which banks themselves borrow money off the markets. Now, that is the bank bill swap rate, interest rate. Now, people might say, well, our interest rates haven't gone up for 2 years in Australia. Why are banks lifting interest rates? It's because they actually, it's only a part of their rationale as to what our own Reserve Bank is doing. It's actually the costs of funding on the market. And those have blown out by about 60 points halfway through this year. And that's because the Fed Reserve in the United States is lifting interest rates. European banks are tightening their spending. So really that's affecting the rate at which banks can borrow money and ultimately what you pay on your mortgage.
Right. So 14 basis points. It's not exactly going to break the bank, but...
Average of about $30 on every mortgage. Yeah, about $35, Westpac is saying, sorry.
OK, it's not too hefty then, but will the other big banks follow this lead, do you think?
Yeah, it just depends on the margins, the cost pressures they're under. CBA, I don't think will immediately because they've got kind of wider margins to play with at the moment. Some think NAB might follow suit because they're under a bit more pressure. It's hard to say exactly what ANZ might do, but you're likely to see at least one of the other big four follow, I think.
OK, and how quickly do the big banks usually move when it comes to these kinds of moves?
Well, tend to move pretty quickly, Laura, so it could well be by this afternoon. OK, we'll keep a very close eye on it. Actually, you will keep a very close eye on it for us. Just one last question before I let you go, Leo. Given the banks have taken a battering over recent times, the PR out of the Royal Commission hasn't been all that great. Is this a smart move from Westpac? It must be quite necessary for them to do. Yeah, look, it's not something I think they really want to do in this environment, but ultimately they're banks and the bottom line matters. It's interesting that you mentioned the Royal Commission because there is some talk that the Royal Commission has constrained lending capacity, which can lead to more of a credit crunch, which also leads to higher interest rates to some degree. But look, I don't think you can blame the Royal Commission for this. This is really on the back of higher lending costs in the open market and really down to the Fed Reserve lifting interest rates.
Hello?
Stephen, are you there?
I'm here.
You're live right now on the show. I got your message. I'm reading the article. What is happening? Interest rates went up. Can you fill us in on what's going on?
Yeah, sure. Basically, as of September the 19th, Westpac Bank are raising interest rates by 0.14%. It's the beginning of the property interest rate rise here in Australia.
How are any tensions? Are you seeing any tensions? Do you any reverb? Anything happening?
There's a lot in the media at the moment, but I expect some tensions to come about in the next 7 to 10 days.
Right.
I say that in all honesty because I expect people to start making a move to fix their finances for better or worse.
Interesting. Well, do you recommend anyone to buy right now?
No, absolutely not.
Okay. Can you tell us why it's not a good time to buy? Because people need a,
Yeah, basically it's not a good time to buy because with interest rates expecting to rise, in addition to the rate rises that have just happened, you'll soon find that property prices will start to increase in deceleration.
And then, yeah.
Basically what that means is they will pick up pace as they go further down.
Do you see a lot of people... I know it's very hard to claim to go bankrupt with a mortgage, but do you see a lot of people they mentioned $35 on average per mortgage on a $300,000, but that's a $300,000 mortgage.
Correct. Correct. Now, just to give you some other information as well, people on $80,000 in annualised income have 42% less borrowing power than 12 months ago.
Oh, that's horrible.
Yes, it is. And they're the bulk of the people who are looking at wanting to buy some form of real estate in that income bracket or a little bit higher, because they've got families. I mean, I'm sure you know the story. They've got families, they've got kids, they've got other responsibilities. They just can't make the equity and also the debt borrowing limits.
So, do you think that the Bank of Australia, do you forecast them raising rates again? I think they need at least 3 to 4 more rate hikes to hedge against inflation. What do you think?
Theoretically, yes, that's correct, but I believe they will not raise rates. They will sit on their hands for the time being, because the problem is if they do, they will make a mess.
But then how do they hedge against inflation?
You can't just stuck between a rock and a hard place. You've got to use macroprudential tools, which is basically borrowing limitations to prevent an outbreak of inflation. So you're limiting the money supply, in other words.
Exactly. I remember reading that in a book, actually.
Yeah.
What do you forecast? What do you forecast for? When do you see the poop hitting the fan? Do you see it Q1 or Q2 of 2020? Oh, actually, it's springtime. It's going to be springtime where you are. Is there going to be a big spring season in Melbourne and Sydney again, or are you going to see flat? Is it going to be flat?
Spring is always big in Melbourne because of the Melbourne Cup horse race. However, this year, I think what you'll probably find is a lot of sellers will come onto the market at once. Some will succeed, some won't. But in 2020, that's the bulk of when the interest-only loans fall due.
Oh!
So that's when people are looking at trouble happening 2019, 2020.
Yeah, they're going to come up for maturity, right?
Correct.
Oh, that's going to be an absolute nightmare.
That's right. So if you're going to do something about it, I'd be doing something in the next 3 to 6 months to get out of the way of the stampede, out of the market.
Yeah, I feel it. I could feel it. I see it happening. But this is a very different housing bubble because Australia has been in the housing bull market since 1975. They've had dips, but they've never had a real crash like Canada has.
No.
Yeah.
No. Our closest crash was the global financial crisis in 2008-9, which is what was called as the Great Recession in North America.
Right.
Basically what happened then, there was the first home vendors boost because the government gave out grants for people to sell property.
But it wasn't a complete full blown crash. It was just I think a dip in the market, and then
Correct.
And then things kind of really bounced back like a quick in a heartbeat. And while the rest of Canada, I mean the United States, saw huge declines, some cities up to 60 to 80% declines.
Yes. I remember speaking to my brother at the time in Vancouver, and he said one of the reasons why he didn't get caught was because he didn't take out a home equity loan.
Yes.
So he left the equity inside his house to act as a buffer.
Yes. An aggregation.
So he was fine.
Yeah. As long as you have a bit of aggregation on your side, you're okay. They raise rates, you're okay. Yeah,
Yes.
If you got to lower the selling price of your home, at least you walk away free and clear. But if your LTV is at 100%, a lot of people in Australia, their LTV is at 100%. They're fully maxed. Now,
Correct.
This is a nightmare. This is worse than a nightmare. It's the perfect storm.
It is, that's true. So you've got to act quickly and work with the lender to get your way out of that situation, because if you don't, that's when all hell breaks loose.
So what do you recommend? What do you see happening in cities like Hobart and those other cities that have spiked in price because of the mass exodus of people leaving Sydney? Do you see them declining?
In the short term, probably not, but in the long run, they will have to come back to the average norm, because Hobart is Hobart. I mean, Hobart is a very small town. It can't handle all the population increase you want. So unless you build up, it's just not going to happen.
Wow. Okay. Well, that's very, 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 very happy to have you on the show. Last second.
Thank you.
I've read the article. We watched the video, and remember, they're describing $30 on average per mortgage of 300 large. But the problem is the average benchmark mortgage in Sydney is 1.42 million or 1.39.
Yes, that's right.
So that's about $150 a month.
Yes.
Okay, so that changes that. I mean, a lot of people. I heard that a lot of people can't afford any increase at all because they're completely maxed out.
Well, correct. I mean, to give you a guide, there was another article written here by a gentleman by the name of Martin North about 2 or 3 days ago. He came out with some analytical information that mortgage rejections of applications were running at about 1,300 to 1,400% this year alone.
Well, because of the stress testing.
Correct.
Yeah, stress testing. So when people ask me, Steve, when people ask me, they go to me, Mike, why do you care what's happening in Australia? Well, they've been stress testing in Vancouver for 1.5 years, 2 years. I think they'll introduce it in Australia just like they did in Canada. They're going to do it in the UK. Yes. They've already done it in the US. It's all an integrated market. So to understand... To understand why Australia, what is happening in Australia, you need to understand what's happening in New Zealand, you need to understand what's happening in the US, and you need to understand what's happening in Canada and the UK. Once you could understand the global and start crunching the numbers and seeing what's happening and following the patterns in every country, and you start seeing the patterns pick up. Vancouver tried to implement, or they're trying to implement, banning foreign buyers, just like New Zealand did.
Yep.
And you see what I'm saying? These patterns are all... Yeah, it's like a big global free market. Every country with a free market is very easy to manipulate.
Correct.
Yeah. Okay, well, yeah, I'll let you do your thing. I appreciate you coming on the show. And, yeah...
No worries.
Yeah, we'll have you on next time, okay?